Well, a few days ago, Indorama Ventures reported its second quarter earnings for the year 2025 and also provided a half-year update. Now, Mr. Agarwal, on a quarterly basis, there was an improvement to the adjusted EBITDA, which increased, in fact, 20% on the previous quarter. But when you look back and you take the longer-term view on a half-year to half-year basis, in fact, EBITDA or adjusted EBITDA is down 21%. It does seem that a lot of the industry challenges that have beset us in the last couple of years are still with us. What's your take on that?
Yeah, let's look at the first half results, what is happening. We had some plant turnarounds of cracker, even Lake Charles, as well as LAB and some Brazilian assets. That nearly impacted $60 million plus, $61 million plus. But you're right, the challenges still remain in terms of huge overcapacity in China. So the integrated spreads in PET did not improve that significantly. That was very marginal improvement. But I think Indonesia also didn't perform that well because the integrated margins were down as far as because of the cracker. So these tariffs are really having some fluctuations in the market, as China's exports of PE to China did not happen as much. As a result, the ethylene capacity utilization went down in US and compressed the spreads. And we also had a LAB turnaround. Fiber is nearly flat because fiber derivatives, we saw some recoveries in mobility. But I would say the management actions, what we have been doing, we are quite happy with that. Management actions in terms of rationalizing the assets. We are still at $120, $130 million of fixed cost saving. Fiber is also taking on some more shutdown of the assets. Europe still remains a very challenging place because of the energy prices, because of the demand as such. Americas remains a very strong point. You know, the IVL differentiator is IVL is 70% EBITDA comes from Americas, which is US, Mexico and Brazil. So I think challenge still remains, but what management actions we are taking are all going good. I'm very encouraged by the first half free cash flow conversion, $616 million, which is 100%. That is result of quite a bit of working capital discipline. So overall situation remains quite challenging, but I would say encouraging. Let's see how third quarter happens. We see initial signs of better numbers because the third quarter sales numbers should be better, operating rate should be better, and some of the impacts which we had in the second quarter will not be there, particularly in Indonesia, like high palm kernel oil prices, lower integrated spreads, TARs are behind us. So this year has been very heavy on the TAR, but we are not where we should be.
Breaking that overall group result down a little bit into each of our four business segments, how did each of them perform given that the overall business is increasingly diversified?
CPET, we have a leading position in the world. However, there is a huge surplus capacity in China, which determines a part of our sales, particularly nearly 2 million tons plus sales, which is in Asia as well as in Europe because it defines on import parity. So the spreads are down because of the surplus, but surplus are going to come down the 2 years down the line, which should help. The demand is growing in line with GDP or slightly better than GDP. Specialty polyester did not do that well because NDC was a little bit delayed. So now third quarter will have NDC production coming in, better IPA demand coming up. So CPET should do better. Fiber third quarter will be comparatively because it's going to be slightly weaker because this is a season, you know, European season, and some of the European assets will be down. Our Asian assets are running pretty well. Mobility, Taccord, demand is reasonably okay, but airbag yarn is depressed. On the non-woven fabric side, it's also okay. Packaging is very, very stable business in spite of we lost the bottling business in Philippines because of the Egypt and all that. And I think it's important what happens to the Trump tariffs. As the Trump tariffs gets sorted out, it is very clear that there will be 15% tariff on most of the products. Unfortunately, PET is excluded at present, while PTA and paraxylene is included. We are the only integrated player in the United States where we make mixalin to PET as well as ethane to PET. So we'll have certain benefits on paraxylene PTA. We'll also have benefits in fabric side, non-woven fabric, as well as fibers demand in US. So US assets, we are making sure they run harder. We are anxiously waiting how PET gets excluded, because that will make a big difference. So overall, Trump tariffs will be positive, about $20 to $25 million per annum.
Earlier, you did touch on our IVL 2.0 transformation program. We're now 1 year, or more than 1 year, I should say, into that 3-year strategy. And to what extent have the milestone achievements, also the objectives and the goals, started to filter through into our performance this year?
We are, as per plan, progressing. As I mentioned, there were 4 pivots in that. One was that how do we reduce our fixed cost and our timely closure of European assets. We targeted $160, $170 million by 25. I think we are already at 120, 130 run rate per annum. Some fiber assets will get announced, so we will be achieving those. Disposal of those assets are also getting on track, Australia, Canada, and we will have a gain of $100 million which will be booked as when realized. So this cash flow will come. As far as we are planning certain IPOs. Market conditions are not very attractive right now, but the work is continuously going on. As far as our market leadership is concerned, that remains pretty strong. We are in consumer staples, so that's going pretty good. We are working on some partnerships, because this is a time of building partnerships together to unlock the synergy. But having said that, petrochemical industry is passing through one of the difficult period, and I think IVL is able to differentiate because of their geographical footprint and product diversity. But we can't be complacent. We'll have to keep working hard on our management actions and make companies so strong so that when the markets turn around, we get the best result out of it.
Well, Mr. Agarwal, thank you very much for joining us. That's it for this half year, and of course we'll be seeing you again in 3 months for the Q3 2025 financial results update. Thank you for joining us, everybody in the studio. We'll see you here again in a couple of months from now.